There are different types of mortgages for different circumstances. So let's take some of the easy ones first. Let's assume that you're going to buy a house that you're not going to live in. It's an investment property. Generally, those require at least a 20% down payment because they're considered a higher risk than somebody who's going to live in the property. In my book, Knowledge is Power, I talk specifically about this and the why the interest rates are a little bit higher for investors, because not only are they considered a higher risk because they don't live in the house, but also they have a higher propensity to not make the mortgage payment. So let's say your income is reduced, and let's say you have to make a choice on what you're going to make payments on. Typically the house you live in is the first thing you're going to make a payment on, your car because you have to get to work, but maybe an investment property not so much. The other type of property that a mortgage can help you purchase is a second home. So someplace on the coast, someplace in a resort community, someplace that you would visit on a regular basis. Generally those do also require a little more down payment. You can get one as little as 10% down, but again, that goes back to the risk factor that we talked about on investment properties, where if it's your primary residence that you live in, your kids grow up in, and you want to make sure that you have a roof over your head, that'll be the first bill you pay. If you've got a second home over at the beach, you may have a higher propensity to let that loan go. The last category of properties is probably the more conventional and the more widespread, is the primary residence. That's where you and I live and breathe each day. Those houses actually have a lot more flexibility for down payment, for loan types. You can get an FHA loan, which is insured by the Federal Housing Administration. Those loans only require a minimum of 3.5% down payment. A conventional loan, you can get as low as 3% down payment. Please, again, keep in mind, anytime you put down less than 20% down payment on a house, you'll have to pay private mortgage insurance for conventional loans or mortgage insurance premium for an FHA insured loan. And always the Veterans Administration, a VA loan, is eligible for veterans or their spouses, and that requires no down payment. It's also a USDA loan, the United States Department of Agriculture. It's for rural areas. It also requires 0% down payment, but it's going to be specific to the house if the house will actually qualify for a USDA loan. So all of those wide variety of products are available for primary residents, much more flexible, much more availability than for a second home or even an investment property.